Imagine waking up one day and realizing that while you've been working hard for money, others have been making their money work for them. Feels unfair, right? But here's the truth. The wealthy didn't just stumble into their fortune. They understood something most people overlook, the power of the stock market. But let me guess, you've heard people say investing in stocks is risky, complicated, or even a gamble. Maybe you've thought, what if I lose everything? Or worse, isn't this only for rich people? Well, let me tell you something. None of that is true. This video is for informational and educational purposes only and should not be considered financial or investment advice. Investing in the stock market involves risks, and you should consult a certified financial advisor before making any investment decisions. Past performance is not indicative of future results. By the end of this video, you'll not only understand the basics of the stock market, but you'll also know exactly how to start your investing journey, even if you have no clue where to begin. Because the truth is, every wealthy person today once started as a beginner, just like you. And hey, if you're thinking, stocks sound boring, let me ask you this. Would you rather binge watch another series this weekend or set up a path to binge watch your bank account grow? Let's go. Now, let's break it down step by step. Stick with me because missing even one part could mean missing your ticket to financial freedom. What is the stock market? The stock market is like a giant online bazaar, but instead of buying shoes or gadgets, you're buying ownership in companies. When you buy a stock, you own a tiny piece of that company. Yes, even Apple or Tesla. These tiny pieces are called shares. Example, imagine your favorite coffee shop needs more money to expand. Instead of borrowing from a bank, they sell tiny parts of their ownership, shares, to people like you. When the shop makes more money, your share becomes more valuable. And if they share profits, you might even get a slice of the pie, called a dividend. Sounds simple, right? But here's the catch. How do you know which company is worth investing in? I'll get to that in a moment. 2. Why do companies use the stock market? Companies use the stock market to raise money for growth. For example, when Netflix wanted to fund their original series, they didn't just sell subscriptions, they raised billions by selling shares. And guess what? The people who invested early made fortunes when Netflix took off. Now imagine if you owned a slice of Netflix back when it was just mailing DVDs. Who knew binge watching could make you rich? 3. Why should you invest in stocks? Here's why this matters to you. Leaving your money in a savings account is like planting a seed in a desert. It grows painfully slow. But investing in the stock market? That's like planting your seed in rich, fertile soil. Your money starts to grow exponentially. And here's the scary part. If you're not investing, inflation is slowly eating away at your savings. What costs $10 today might cost $20 tomorrow. Investing isn't just an option, it's a necessity to secure your future. But wait, how do you start investing without losing money? I'll explain that next. 4. How does the stock market work? Think of the stock market like an auction house. Buyers and sellers set the price of stocks based on demand. If a lot of people want to buy a stock, the price goes up. If people want to sell, the price goes down. Example, let's say you buy a stock for $100. If demand rises and the stock price increases to $150, you've just made a $50 profit. Sounds amazing, right? But here's the golden rule. Don't invest in what you don't understand. Always research the company first. So where do you even buy these stocks? That's what we're covering next. 5. Getting started as a beginner. Step 1. Open a DMAT and trading account. In the US, UK, or India, you need a DMAT and trading account to buy and sell stocks. Think of it as your bank account for shares. Popular platforms like Robinhood, Zerodha, or eToro make it super easy to get started. Step 2. Start small. Don't invest your life savings on day one. Start with $100 or less. Think of it as tuition for your stock market education. Step 3. Diversify. Don't put all your money in one stock. Imagine betting on one player in a team. What if they get injured? Spread your investment across different industries to reduce risk. And here's the biggest secret of all. the magic of compound interest. This is how your money works for you. Let's talk about it. 6. The power of compounding. Compounding is the ultimate wealth building tool. When your money earns returns and then those returns start earning returns, your wealth grows exponentially. The earlier you start, the more powerful it becomes. Example: if you invest $100 a month starting at age 20, you could have over $1 million by retirement. But if you wait until 30, you'll have half that. Time is your best friend in investing. Now that you've got a basic understanding of the stock market, let's quickly go over the pros and cons to give you a realistic picture. Advantages of investing in the stock market. Wealth creation. The stock market has historically delivered higher returns compared to other investment options like savings accounts or fixed deposits. For example, companies like Amazon and Tesla have created millionaires over time. Ownership in companies. By buying shares, you own a part of the company. This means you get to benefit from its growth and success. Liquidity. Stocks are highly liquid. You can buy and sell them quickly whenever you need cash, unlike real estate or long-term bonds. Dividends. Many companies reward shareholders with regular dividends, providing a passive income stream even if the stock price doesn't rise significantly. Beating inflation. Investing in stocks helps your money grow faster than inflation, protecting the value of your savings over time. Disadvantages of investing in the stock market. Market volatility. Stock prices can fluctuate wildly in the short term due to market conditions or economic factors. This can lead to losses if you're not careful. Risk of losing capital. There's no guarantee that the stock you invest in will perform well. A poor performing company can lead to significant losses. Emotional stress. Watching your investments rise and fall daily can be emotionally exhausting, especially if you're a beginner. Need for knowledge and research. The stock market isn't a get-rich-quick scheme. It requires consistent learning, analysis, and patience. Brokerage and fees. Every trade involves brokerage charges, and frequent trading can eat into your profits over time. So, while the stock market can turn you into the next Warren Buffett, it can also make you feel like you're on an emotional roller coaster ride. But hey, isn't life a little boring without some thrill? So now you know the basics of the stock market, what it is, why it matters, and how to start. But here's the thing. Knowledge without action is useless. It's time to take the first step toward your financial freedom. Imagine a future where you're not worrying about bills, where you have the freedom to travel, buy your dream house, or retire early, all because you took action today. That future is within your reach, but you need to start now. Now, if you found this video helpful and want to continue your journey toward financial freedom, make sure to hit that subscribe button and turn on notifications so you never miss an update. Here at Smart Money Mentor, we're all about helping you make smart financial decisions and live the life you've always dreamed of. And don't stop here. Check out my video on how to earn your first $1,000 or discover 7 powerful side hustles to boost your income. Click on the end screen and I'll see you there.